Understanding the most active commodities by value, a quick guide. When you see a commodity with 1000 plus crore changing hands in a day, that's where the real money is. In this video, you'll see which commodities dominate by value in India, why they do, and how you can use this knowledge to spot better trades. What are commodities? Commodities are basic goods used in commerce that are interchangeable with other goods of the same type. They can be categorized into two main types: hard commodities like gold and oil, and soft commodities like coffee and sugar. What active by value means and why it matters. Most active by value means the commodities where the highest total rupee value gets traded in a period, day/session. It's not just about how many contracts volume, but how much money is being moved. Why care? Because large value flows often signal institutional activity, high liquidity, and meaningful trends. If a commodity is top by value, it's more likely to react to macro, policy, and volume confirmation. Typical leaders, most active commodities by value. Let's look at recent data. According to IIFL, the top traded value contracts on MCX include silver, KGS contract, silver MIC, silver M, and gold contracts. India info line. Silver often leads because the per unit price is high and traders push big speculative money. Gold too, often tied to macro and safe haven flows. Beyond bullion, natural gas, crude oil, and base metals such as copper, zinc, aluminium also frequently feature in the high value list. What makes a commodity high value? High price per unit. Gold, silver, and crude oil all have high unit prices. So even modest volume produces big numbers. That's a built-in advantage. Macro/institutional and speculative flows. When global funds, ETFs, or institutional traders move in or out, they tend to pick high-value contracts for scale. That pushes value dominance, not smaller agricultural contracts. Volume versus value. Always pit volume rank against value rank. A contract might be number one in volume, but if its per unit price is low, it may not show up in the high-value list. Value leaders are typically where the money is chasing, but volume leaders tell you where lots of participants are active. Use both to triangulate strength. Value spikes and what they reveal. Case 1, silver. Recent data, value jumped massively as speculative money bet on inflation and rupee weakness. Volume plus unit price gave it a dominant figure. That tells us, smart money sees silver as a macro play. You can ride momentum but watch reversals. Case 2, natural gas. A weather shock or supply disruption in global gas markets often leads to huge value in India. Volatility is extreme, so money floods in. These spikes can lead and fade quickly. Timing and risk control are crucial. How to trade or use active by value data. A. Morning scan. Check top value boards, MCX/IIFL/brokers. Identify 23 commodities to monitor. B. Confirm with volume and open interest. Value without volume backing is suspicious. Rising open interest plus rising value equals confirmation. C. Check global and macro cues. USD trend, global commodity indices, China demand, OPEC, etc. Currency movement, rupee weakness adds fuel. Risks, limitations, and common mistakes. Don't fall into these traps. Chasing late, entering after value surge often means you're late to the party. Ignoring drop-off, if value and volume collapse, trend may reverse. Over-leverage, high-value contracts magnify both profit and loss. Want to learn more? Visit our website.